A unique approach to gold for the ultra wealthy in Asian nations has me a little bit shocked as to what it would take to be able to make this happen. We'll talk about what it is and why it has me surprised as we explore. For you and I, well, we just buy gold whenever we can afford to. Of course, the prices have been pretty cost prohibitive to get a full ounce for many of us, and so buying is few and far between, as gold prices are now flirting yet again with new record all-time highs, even when adjusted for inflation. Most of us, well, we buy fractional more often than not, and these days, like my good friends at Summit Metals, they have this cool little wallet-sized holder where you can buy little gram bars on the cheap. Yes, indeed. Yes, there's a premium to these, more so than other stacking sizes. But I tell you what, when it all boils down to, those premiums are smaller now than they've been in the past. It's nice to be able to add a little bit of gold to your stack in this way and store them in a little wallet so you don't lose it. Check that out at summitmetals.com. But gold, indeed, the ultra wealthy, they're not so concerned about gram bars, but some of them may be buying gram bars too, but they're just not even buying from the major dealers anymore. They're doing something very different according to TradingView. In Asia, the wealthy circles in those countries, some family offices are now bypassing the middleman and jumping into the gold business itself. They're financing, shipping, and flipping bullion just like traders. They're essentially becoming their own bullion dealer. And by the way, that may sound a little crazy, especially considering how popular gold is in Asia. There's probably likely a whole lot of bullion dealers and traders there already. But Cavendish Investment Corporation, which is a multi-family office run by the former chairman of a Hong Kong jewelry company, which is allocating roughly a third of its portfolio this year to the physical gold trade, going a step beyond index trackers and vault holdings. Precious metal dealers J. Rothbart and Company and Goldstrom are also trading with the region's ultra-rich clans. That's right, it's crazy. Now, by the way, you may notice there's a piece missing right here. I'm going to show you I'm going to move these over and prepare for when that piece is going to come. So stay tuned. I'm going to show you that later in the video because there's different ways to buy gold. There's different types of gold to buy. And let me just show you, because sometimes we need to flip the script, as it were, and watch as we see the wealth just pour down. Yes, indeed. As we can see there, let's get into what Cavendish sources gold from small-scale mines in Kenya and elsewhere in Africa. Flies it to Hong Kong, refines it and sells it at market prices to wealthy clients across Asia and to Chinese strategic buyers. If this sounds like a 19th century trading house, well, that's about right. It's a seller's market, said Jean-Sébastien Jacquetin, managing partner at Cavendish. He declined to disclose the firm's assets under management or how much money in total it allocated to the deals. We believe we have a window of about a year to capitalize on this opportunity. So this is a very narrow window, a very interesting move, and something new for many of these wealthy in these Asian countries. It's pretty wild, pretty remarkable indeed to see that kind of movement, and they're taking advantage of what's happening. There's a lot behind it too, and a lot of motivation for them to do this. In the world of ultra high net worth investing, gold had always served as a passive hedge against riskier trades. But in a moment when wars, inflation, and central bank blunders are seeming more like fixtures, demand for gold has exploded. And I think what they're referring to with regards to central bank blunders is quantitative easing. That's not just an American problem, by the way. Other nations are doing it too. It's modern monetary theory, essentially, which is Keynesian economics on steroids at the central bank level. So yes, and so that is what's happening here. Demand for gold is exploding. Uncertainty over the status of gold and President Trump's sweeping tariff agenda has plunged the market into fresh turmoil in recent days. Trump did weigh in, saying on social media that imports of gold will not face U.S. tariffs. though the market remains on edge as the White House has yet to issue a formal policy update. There's supposed to be an executive order. It was just a Truth Social post. But remember, he said early on that there was not going to be any tariffs on precious metals. That was the policy. And now, of course, we can see that is still not the case. But the markets, it's too late, really. The markets are kind of panicking about that. And likely there will still be some uncertainty there, which will help bolster the price. Wealthy investors in Asia have shown strong appetite. Those in Hong Kong have more than doubled their allocation to the precious metal in a year, according to a 2025 HSBC survey. On the mainland, the shift was also dramatic to a 15% of portfolios, up from 7% a year ago. The survey of over 10,000 affluent investors in 12 markets showed. Wow, that is dramatic. That is big. That's a big deal. So these aren't just central banks. This is the ultra wealthy coming into play and making this move. Wow, crazy. Now, Asian families understand gold more intimately than Western families because it's been a part of the culture for so long, according to Joshua Rothbard, founder and managing partner at precious metals broker J. Rothbard and Company. They know they need to make this investment as a business. Some have turned to leasing it. Billionaires' families at the United Arab Emirates and Hong Kong are earning 3 to 4% returns by lending their physical bullion to local jewelers, adding a yield on top of the usual price appreciation, according to Rothbard and precious metals trader Goldstrom. They're turning a safe haven asset into a quietly compounding cash machine. Others are entering profit-sharing ventures with Goldstrom and J. Rothbard and Company. Meanwhile, some are playing the arbitrage game, and it's a good opportunity to do that right now, seeing the disconnect between the Shanghai Gold Exchange and Western markets. They're buying discounted bars in Dubai and flipping them for premiums in Hong Kong, where demand is especially high and logistics are streamlined. Wealthy families can also use their physical gold as collateral to borrow money for other investments. Yes, wow, it's crazy what's going on there. And those other investments can be anything from crypto, real estate, stocks, and pretty much anything else. Pretty much anywhere you go in Asia, everyone buys gold in much larger proportions than they do in the West. According to Patrick Dewey, executive director at Goldstrom, people hold gold because they know they can always liquidate it on a rainy day. In fact, you can liquidate it any single day. Even on a sunny day, you can liquidate gold. It's that liquid. That's right. Because rainy days are very liquid too because of all the rain falling. But even on a sunny day, it's very liquid. Rain, metaphorically speaking, is in the forecast. The U.S. dollar has been wobbling under the weight of a ballooning U.S. debt and deficit and potential interest rate cuts by the Federal Reserve. This is likely only going to get weaker as these interest rates come on board. As we know, they're going to be cutting at least 4 times in the next couple of months here and into 2026. Yes. So this scenario in which non-yielding gold's appeal is likely to shine even brighter, while a weaker greenback makes the metal price in U.S. dollars cheaper. It's cheaper and when it's priced there. And it's going to be something that you have to think about. It's going to be cheaper priced in U.S. dollars for most buyers. Deutsche Bank sees bullion averaging $3,700 an ounce in 2026, while Goldman Sachs Group expects the rally to continue as high as $4,000, which is up from around $3,375 on August 11th. So they are indeed continuing to make those bullish calls, and I'm kind of right along there with them. I think we're going to see gold continue to climb from here, which is why I made a purchase. That's right. And your clue is sitting right in front of you. That's right. I went and bought the proof high relief version of this. It is this right here. It is the high relief swan. It is a collector piece, and I know you pay a premium for it, but honestly, the premium wasn't too bad for this. It's only a couple $100 more than the normal premiums on this coin, on the bullion version. But very low mintage. Just figured I'd add it to the collection and stack. I really, pieces like this, even though they're high premium collector coins, I count it as weight only. And I just the prices have gone up so much they're swallowing up the premiums, and some of the stuff you can get fairly cheap in the secondary market if you can find it available. It's one of those coins where it's a Perth Mint product. Perth Mint's obviously high quality stuff there, and so I figured, you know what, I add this to the collection and have a little bit of gold there, have a little fun rather than buying just the same old every time. Plus, something to show on the channel, because what I like to do is show different kinds of coins in the channel, and that's exactly what I do to kind of hopefully keep you interested, since I don't have a script and I don't do any editing or anything like that. It's kind of off the cuff here, as you know, and so I'm going to make mistakes and the like, and just roll with the punches here. But it's very interesting to see what's going on, because the hedge against the Hong Kong dollar is actually getting physical metal gold, because Hong Kong is basically out of control with its own currency. According to Quentin Mai, Chief Executive Officer at West Point Gold, which is a mining exploration company, for Hong Kong's gold market, there's also support from the mainland, the biggest consumer of the precious metal. China launched its first offshore gold vault in Hong Kong this year, making settlement easier for global players and quietly reinforcing the city's role as Asia's bullion hub, just as Beijing intended. But there are limits to those efforts. For one, compliance concerns persist. Of Hong Kong's several refineries, only 2 of which are accredited by the London Bullion Market Association, an influential trade body we know that requires firms to screen for conflict-linked environmentally harmful metal. Most of the world's bullion buyers, including central banks, institutional investors, and luxury brands, only accept responsibly sourced gold from refineries on the LBMA's good delivery list. And that this can pose a challenge when dealing with supply from places like Kenya, which non-governmental organization SwissAid has singled out as a transit hub for smuggled bullion from other African countries. Earlier this year, the group had said that the nation may have become a conduit for gold from Sudan, where civil war has raged since 2023. Cavendish is working with precious metals trader Ramco Limited, which does everything we can to source gold from quality sellers, ensuring we are compliant with Hong Kong law. Another consideration is that trading unrefined gold can be a very high-risk strategy that requires not only a deep understanding of the gold market, but also solid connections with legitimate players. When you absolutely know what you're doing, it's mechanical and very lucrative. But there is an enormous gap between not knowing exactly what you're doing and having a working process that's tried and tested. And a lack of experience can cost you thousands, if not millions of dollars. There's also concern that the party may not last. After a phenomenal rally in the last year, even the most enthusiastic gold bugs may find prices near record levels increasingly difficult to stomach. Cost-sensitive buyers in the region may find themselves priced out of the market if the rally continues to reach new heights, with lofty prices already weighing heavily on demand for gold jewelry in China and India, the 2 biggest consumers of bullion. We anticipate that in about a year, the market will start to cool down as geopolitical issues ease around the U.S. midterms in 2026, and demand will decrease. So for now, the profits are alluring, and for Cavendish and its business partners, for instance, they clear 5 to 10% premiums on each round-trip shipment. That's a pretty big deal. Prior to the shipment, the gold is pre-assayed to analyze the gold's composition to enable export tax calculations. Then unprocessed gold arrives at a specialized cargo terminal in Hong Kong International Airport and moves swiftly to local refineries for fire assaying. Days later, it's headed to private vaults or across the border to mainland buyers, some of which are state-owned companies. So given the premiums people are willing to pay for gold, it's going to attract more people and bigger players, at least for now. So there you have it. A very interesting and unique way that some of these ultra-rich are now handling themselves and making this move. Let me know what your thoughts about this. It's just another example of where gold is going in the shifting gold market. This is interesting indeed. So I hope you found this video informative, insightful, and educational. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.